Hello traders, the title of this video is Elliott wave counts, tips and tricks. Elliott wave counts, tips and tricks. Well, in this video, we're going to discuss how to count Elliott waves and also share some few tips and tricks and when we are counting, that we can use when we are counting Elliott wave. All right. In order to apply the wave principle, one should be able to recognize the wave patterns, the corrective Elliott wave, the impulsive Elliott wave, and most importantly, one should be able to count Elliott wave accurately. We have guidelines that we follow. We know that before the first Elliott wave, very often we will see a consolidation, which is a low volatility period. A low volatility period followed by, a high volatility period, followed again by a low volatility period, again another high volatility period, another low volatility period, and also another high volatility period. The first wave, the third wave, and the fifth wave, these are high volatility periods. The second wave and the fourth wave, this is also a low volatility period. But we know that the first wave, the second wave, the third wave, the fourth wave, and the fifth wave, this is what we call the motive wave. So from the beginning of the first wave up to the end of the fifth wave, that's what we call the motive wave. After the motive wave, we have the corrective phase or the corrective period, But in this video, I want to share with you another tips when you are counting wave. And this time we're going to talk about a cycle point. What is a cycle point? I have posted a video at Joe Trio channel, and I was talking about a cycle point, the roller coaster of the forex trading. The time in London is 48 minutes past 3 p.m. In New York, 48 minutes past 10 a.m. on the 2nd of September 2014. What is a cycle point? I'm on the 30-minute chart of the dollar-yen currency pair. And a cycle point, I'll show you now. So if, for instance, the price goes down, price went down, and goes back up, quickly return back to the starting point. So this is the starting point when the price starts going down, and the price goes up again to the starting point. This point here, that's what we call a cycle point, The opposite is also true when the price will go up first, Price goes up, and then price come back down again to the starting point. So this is the starting point here. Price start going up from the starting point up, and then come back down again to the starting point. So this point here is what we call a cycle point. Whenever you see a cycle point, draw an horizontal line. So you will draw an horizontal line at the cycle point. Very often, the motive wave, remember the motive wave is formed of the first wave, second wave, third wave, fourth wave, and the fifth wave. Very often, at a cycle point, we can see, the beginning of the motive wave, which means the first wave will start from a cycle point. In the previous video that I was telling traders, in order to detect the first wave, sometimes you will see a consolidation, So we see a consolidation first, and then we see a breakout, first wave, That's the first tips that I gave traders in my first video. And then we have second wave, and then the third wave, fourth wave, and then the fifth wave. So this is the guideline that we follow. So consolidation, low volatility period. First wave, high volatility period. Second wave, low volatility period. Third wave, high volatility period. Fourth wave, low volatility period, and the fifth wave, high volatility period, followed by the corrective phase. There are different types of corrective waves. I recommend to trader to watch the videos about the flat correction, which is a bit, advanced trading pattern that trader must learn to master if you want to use, the Elliott wave principle. So this is the first guidelines: consolidation, breakout, and then 1, 2, 3, 4, 5, followed by a correction. All right. But in this video, I want to share with you another tips about how to count Elliott wave. This time we will be using, the cycle point. So apart from the consolidation period that takes place before the multi-wave, we can also use, the cycle point. All right, so price goes down and go back to the starting point, and then we see a breakout, 1, 2, 3, 4, 5, Or price goes up first and return to the starting point. So this is for the downtrend. So you see like this, and then you see 1, 2, 3, 4, 5 to the downside, So this is what's happening here on the 30-minute chart for the dollar yen. We have a cycle point. Can you see it? You see that the price start going down here from this point. This is a starting point. Are you with me? And then the price went down to this point. All right. And then it returned back to the starting point. All right. So this is what we call this point here. This is what we call the cycle point. I'll color it into red so you may know what I'm talking about. So on this 30-minute chart, we have a cycle point. And following our guidelines to count the Elliott waves, we know that the multi-wave can start after a consolidation or after a cycle point. All right? Very important. All right? There are other tips and tricks that we can use if you want to count Elliott wave, but I will be recording another video in the future. If you want to know more about the wave principle or the wave strategies, go to www.24elliottwaves.com. This is our website, or go to our YouTube channel, www.youtube.com/user/24elliottwave. The 24elliottwave YouTube channel. Subscribe for free and watch the videos, So on this 30-minute chart, as I'm recording this video today, on the 2nd of September 2014, we have a cycle point, which is the red line here. It makes sense? So whenever we see a cycle point, you can see here we have, in fact, a double setup because we have this cycle point here. But if you look carefully here, let me remove the horizontal line. You can see that even though we have a cycle point, the price did not start going up straight away. We have again a consolidation. It's very good indication to us that if we have a breakout, there is a high chance that we may have a motive wave starting from here. So you see the small consolidation here after the cycle point. Sometimes you may not have the consolidation, so you may have a cycle point, which means breakout straight away, 1, 2, 3, 4, 5, But here we have the cycle point plus the consolidation on this 30-minute chart. The wave strategy that we're discussing here is valid for stock, for commodity, for futures, for ETF, for indices, So this is what I want to traders to understand, When it comes to Elliott wave, I do not have any secret at all, So here we see now, I'm going to move my horizontal line back to the cycle point, and this allows me today to count the wave. So here, this is my first wave. Are you with me? I'm going to color it now into green. That's my first wave. That's the breakout from the cycle point. It makes sense? And then we have this kind of horizontal section here. You see this section here? That's the second wave. I will color it into orange, And then we have now the third Elliott wave, the longest wave here in this section here on the 30-minute chart. I will color it in turquoise, And then we have the fourth wave. You see here, this section here. All right. I will color into pink, followed by the fifth wave. All right. I'm running out of color now. So I will use, the fifth wave, I will use the red line. That's the fifth wave. So As you can see here, we have a cycle point. Again, consolidation. Normally, you don't have to have consolidation, but now we have consolidation. Then we have breakout. The breakout is the first wave, second wave, third wave, fourth wave, and the fifth wave has ended right here. It's beautiful. Now, the challenge of wave counts is about detecting first the first wave. So if you get the first wave wrong, you are likely to get the second wave wrong. All right, so it's very important to know how to recognize or to identify, the first Elliott wave. Once you see the first Elliott wave, you can now, start counting the second wave and move on to the third, the fourth, and the fifth wave. All right, it's simple. Is also powerful, okay? All right, this is about, Elliott wave counts, tips and tricks, all right? So you want to understand what is a cycle point, all right? And also follow the guidelines, okay? The first guideline that we were talking about is a consolidation breakout, okay? So the breakout, the first wave, usually we break a resistance on the left-hand side. So when you see the first wave like this, see here, I count this as a first wave. I'll look on my left-hand side. If you look here on the left-hand side, there's no resistance. If the price break all the resistance on my left-hand side, this is the guideline that myself I follow. This is my recommendation for traders that are following us at 24 Elliott wave and also on our YouTube channel. So the first wave must break resistance on the left-hand side. If it does not break resistance on the left-hand side, we will put a question mark on it. So we will label it and say, okay, let's see what's going to happen, okay? It may not be correct, but you just want to make sure that, you are not violating, the market pattern. The market patterns are the rising channel, the declining channel, and horizontal channel. We do not want to fight the trend, okay? When we are counting the Elliott wave, okay? So I have counted 5 waves, so now this is a correction taking place here. Which kind of correction come into our mind? Traders that are studying and learning to master the wave pattern must learn the zigzag pattern and the flat correction. Very often, we see for day trading, the flat correction pattern is a very powerful Elliott wave, a price structure, all right? So I have talked about the flat correction many times in our video. All I will say now is to recommend to traders to go to our website, click on flat correction, or go to our YouTube channel, check the videos about the flat correction. There are different types of the flat correction, the regular flat correction, the expanded flat correction, and the running flat correction. You want to understand this and know when and where the flat correction will take place and how the pattern is formed. Now, for traders that are more advanced, sometimes we see a distortion. This is another challenge where we are counting with. Sometimes the price structure is distorted due to high volatility or due to market manipulation or due to economy news or other things in the market. So sometimes you will face that challenge where you'll be wondering, is this, flat correction, is this the second wave because of the distortion, all right? As again, I've talk about this on our YouTube channel and also on our website, how we can deal with the distortion. There are rules that we follow. The second wave must not cancel the first wave. And if the second wave has canceled the first wave, what do we need to do? All right, we need to start counting the wave against. These are the guidelines that we follow. As always, practice will make traders better traders, okay? So we count 5 waves. So now I'm going to move very fast because I don't want to dwell on the flat correction. So what we do, we highlight, using the Fibonacci extension. We will use the Fibonacci extension for the 5th wave. It's the 5th wave here. So very often after we see the 5th wave, we draw the line at which level traders that are following us, that are studying, truly, all right, will know the level that I'm going to talk about. The zone of 138% Fibonacci extension of the 5th wave. This is the line that as soon as we see the 5th wave, we can draw a line there, all right? Draw a line, which I call now into, turquoise. That's the horizontal line here. So I'm going to remove my Fibonacci extension. You can see 138, followed by 150. The second line here is a 150 Fibonacci extension. And the third line here is a 161 Fibonacci extension. You can see that the price went through the 138 and went all the way to 161 Fibonacci extension zone. Very often you'll see that. Professional, aggressive Fibonacci trader very often, if they are selling here, they will play their stop loss behind, all right, the 168% Fibonacci extension zone to avoid being taken out of the trade, all right, depending on your risk tolerance. So what I'm going to do now, I'm going to remove my Fibonacci drawing tools, all right. All right, I'm going to remove my Fibonacci drawing tool. That's it, is gone. So we see now, this is the first part. Okay, in fact, you see that there was again consolidation here. I will discount that consolidation now. Okay, normally the flag correction say 1, 2, 3 down, 1, 2, 3 up to the zone of 138% Fibonacci retracement level. As I said to you, I don't want to, okay, repeat myself, okay, about the flat correction. So normally we should see 1, 2, 3 down and 1, 2, 3 up, which is a double retracement, bringing the price to the zone of 138% Fibonacci extension zone. Do not forget the 161% Fibonacci extension zone, as I've already explained to you. So all I'm going to do now, I'm just going to draw a line here because it was really flat here. You see it went horizontal, and then boom, up. There is a high chance, repeat, not certainty. So when you count your wave, this is a setup. This is a bearish setup here because we have counted 5 wave and the price push it to the 138%. This is a setup. TSTW24 trader will go to the first best time frame. Trader can go to the lower time frame, 1 minute time, 2 minute chart, 3 minute chart to monitor the reaction of the price in this zone before one can sell. This is about the top-down trading method, okay? It makes sense? It's also powerful. So in normal condition, repeat, in normal condition, we are likely to see what? Okay, the price coming down in 5 move. 1, 2, 3, 4, 5. That 5 move down, you will see the low wave will be overlapping. This is not an impulsive wave because during an impulsive wave, the wave should not overlap, all right? But the C for Charlie, the C part of the flat correction is formed of 5 waves that are overlapping. 1, 2, 3, 4, 5. You see now? So I don't want the video to be too long, so I want it to be under 20 minutes, okay? So you can watch it and replay it. So now I draw my line here, so I don't want to dwell on it too long. So, all right, so watch the videos, okay? If you like the video, give us the thumbs up. If you dislike it, give us the thumbs down. It's very important for us to know whether you like it or dislike it. Have any comment, put it below. I'm a very busy person. Some trader will contact me. Sometimes I'll just record video, and the trader that are following us will notice that, okay, I have answered that question. As one of the trader, Edward, thank you very much. I received your email. And also you have watched the video and you know that I have answered your email, which is great. Thank you very much, Edward. Okay, I don't want to talk about his surname. Okay, so I call Edward, okay? All right, so now I'm just going to go now to the 3-minute chart to monitor. So when we go to the lower time frame, we want to see what is happening now, the momentum, what is happening now, right now. We are about to enter the trade. We go, okay, to the lower time frame, and we want to zoom into it, and see what's happening here. So far, but another thing I need to mention to traders is this, okay? So the time now is 16:04 in London. In 1 hour time, London will be closed. In New York, it's 4 minutes past 11. This is, okay, not the best time for day trading. All right, it's not the best time for day trading. All right, it's not the best because if the market is open, the first 2 hours is the most important time. So we got 30 minutes at least. Are we going to have enough time? Okay, so if you are, we want to enter the trade now, we need to keep eyes on it because after 30 minutes, okay, we'll know that we are into the gap period and can be tricky for day trading, and we can end up holding this trade to the Asia session. Blah, 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 if you trade Forex and so on and so on. Okay, this is another thing, okay? So now you see there was a high, okay, followed by, okay, another lower high. We'll see carefully. If you're happy, if you're aggressive trader, you may decide to sell it straight away and play your stop loss ball. But it's up to you what you want to do. Thank you for watching, and I will speak to you very soon. We are the TSTW 24 traders. Speak to you soon.